When the VIX closes at 45, that is not just volatility, that is panic. And that is what we saw on Friday before we closed out the week. Now, anytime the fear reaches that level, you want to zoom out and you want to ask, what are we pricing in? Because when fear gets this high, something big is brewing. Today, we're going to walk through exactly what is driving that fear, including Trump's new tariff policies, comparisons to what happened the last time he imposed tariffs, and why this time could actually be worse. We're also going to take a look at historical Black Monday crashes, what caused them, and how the market was behaving the week prior to that, and what to look for as the markets reopen for this coming week. Then later on in this video, I'm going to walk you through how Bitcoin held up this week and why that doesn't necessarily mean we are safe for now. So let's get into it. First, I'm going to start with the VIX. The VIX is the so-called fear gauge. It tracks expected volatility in the S&P based on options pricing. Now, when you have a look at this chart, you'll see here that a normal VIX is somewhere around the 20 level. Once we get above this 25 area right here, that's when traders start getting nervous. When we get above 30, which is just the bottom of this box right here, that's when we've got real uncertainty, and anything above 40, well, that's essentially panic mode. On Friday, we closed at about 45. That is actually the biggest level we've seen in 8 months. The last time we saw a spike above that level was over here on the 5th of August, 2024. The fact that this happened on a Friday leaves us at high risk of a potential Black Monday event when the market does open this week. In fact, in 1987, the Dow Jones dropped 22% in a single session. That's the biggest one-day percentage loss in US stock market history. This happened at the open of the New York session, and the sell orders just piled in, and without circuit breakers back then, it basically just turned into a waterfall. Now, am I saying that's going to happen again? No. The lucky thing is that we get to worry a little bit less now, because in today's market, there are 3 levels of circuit breakers. So let me just quickly explain that to you. Now, the circuit breakers relate to the S&P. So if the S&P were to drop 7% in a single US session, trading would halt for 15 minutes. If it were to drop 13% in a single US session, the trading would halt for 15 minutes. And if it got really dramatic and we were to drop somewhere around 20%, the trading would halt for the whole day. So that's considered level 1, level 2, and level 3. Now, these are designed to stop panic selling and give traders time to breathe, essentially. Kind of wish we had circuit breakers in crypto, not going to lie to you. But here's the key point. Friday brings fear. Plus, following that, you have weekend uncertainty. Plus, following that, if the US doesn't step in to stabilize the market on Monday, we may end up experiencing panic selling. So that is the pattern worth watching right now. Now, let's start with the obvious. Trump is back in campaign mode and he's hitting hard. On April 3rd, he announced sweeping new tariffs, including a 10% universal tariff on all imports into the US starting April 5th, up to 49% on specific goods from China, Vietnam, and parts of Southeast Asia. Plus, we had retaliatory tariffs from China. They were already announced at 34%. Starting April 10. Now, Vietnam has expressed willingness to reduce tariffs to 0 pending a trade agreement, but all of these things are escalating trade tensions and they're major catalysts for the current market volatility. Now, we've seen this movie before. Back in 2018 and 2019, Trump launched a trade war, and while we didn't get a Black Monday style crash, the market had some serious single-day drops. If we have a look at the Dow Jones in March of 2018, we can see here that we had a drop of about 4.5% after the China tariff announcement. And then in August 23rd of 2019, the Dow was down again after a Trump tweet where he tweeted that US companies should immediately start looking for alternatives to China. So the markets were shaky, but they weren't broken. But the difference this time is that the language and policy are a lot more aggressive. We're seeing broader tariffs, faster implementation, and larger retaliations, and the market isn't really reacting well. Volatility is spiking, sentiment is breaking down, and volume is shifting into risk off. Which brings us to the big question. Could this be setting up for a Black Monday style event? Now, Black Monday refers to a historic one-day stock market crash that comes seemingly out of nowhere and erases massive value. There have been three major Black Mondays in modern US market history. The first one I mentioned to you earlier was in October 19 of 1987. The Dow dropped 22.6% in a single day after computerized trading systems triggered a cascading selling. Now, the second one was in September 2008, September 29. That was this one right here. And that was when Congress rejected the first TARP bailout during the global financial crisis. And then finally, we have probably one that we would all remember, which was in March of 2020, and that was the COVID panic that triggered a massive drop in the markets and led to market-wide halt via circuit breakers. But the real question here is, what did the week before that happen actually look like in each of those cases? Because that can help us to get an idea of what to expect as the markets open this week. So in 1987, the markets were actually rising irrationally, and then they just cracked on the Friday before the crash. Then in 2008, the S&P had already been falling for weeks, but the Friday before the big Black Monday drop, there was a slight bounce. And in 2020, volatility had been rising for 2 weeks, and then Friday, March 6th closed weak, setting up the Monday collapse. Okay, now let's fast forward to this past week. So the S&P dropped this past week. It was actually quite a dramatic week if we have a look at the chart over here. If I just measure it from this high here at the beginning of the week, we were down 12%. In total, since the all-time high, we're down about 17.5%. Let's have a look at the NASDAQ last week. Again, from the same point I'm going to measure, it was down 13%. That's really kind of crazy, right? But from its high up here, it's actually down 22%. Crazy. Let's go and have a look at the Nikkei. Now, the Nikkei, I actually spoke about this on a prior video about this area right here. And the expectation was that we would come back to revisit that area. So it does look like we're on the way there. We haven't quite made it there yet, but we are, I would certainly say, close enough. And if we have a look at last week's move, that's down about 12, just a bit over 12%. And then as I mentioned to you earlier, the VIX, of course, spiked above 45, being the highest level we've seen in 8 months. So this setup is kind of freakishly familiar. We have fear, we have fundamental catalysts, and we've got also technical breakdowns. Now, listen, I know that this sounds scary, but if you're a trader, then you know that volatility is a trader's paradise. When you know how to trade the markets, you can trade whether the price is going up or it's going down. So the only thing you want to be careful of in high frequency trading times is the fees that you're paying to exchanges. Now, we've partnered with BingX to bring you the best trading fee rebates in the market. You can get 20% trading fee rebate on all your trades for life, but you can only get that if you use the link in the description of this video to join. So grab the link down below, check them out, and if they're right for you, you can create your account for discounted fees today. All right, now let's talk about how this could play out heading into Monday. There's a few things. Just in general, the Sunday open is going to be critical. We've got the dead gap zone always starts at Sunday 5 p.m. New York time, and that runs between 5 p.m. to 8 p.m. Following that, we have a half-hour gap, and then we go into the Asia session. We want to see how Asia reacts because the tariffs obviously affect them. So we want to see, first of all, if we get regular behavior from Asia. I mean, that would probably be best case scenario, but it's not really all that likely at this point in time. Regular behavior would be that Asia just consolidates and stays within about a 2% range at most. Following Asia, we go into the UK session. Now, that runs a trend, right? So the trend can run to the upside. It can also run to the downside, but it will often run on lighter volume than the US session that follows it. But the key here is going to be to look for which way UK is running their trend. Now, if Asia or UK, either both of them or one of them, run a trend and that trend is to the upside, I would be very, very careful this week and pay extra attention to what happens when the New York session opens. Now that opens at 9:30 New York time, and this is key because if we get a gap down in the traditional markets and the VIX stays elevated, a deeper flush could be coming. And just a reminder that we have the circuit breakers. They exist now, so just keep that in mind. I don't know if it's going to get that dramatic. It's just worth knowing this in advance because of the price action that we saw on Friday. So just know that those numbers, they only apply during US trading hours and that must occur in a single session. And just a quick reminder before I get into the Bitcoin price action, if you want help navigating this type of market with understanding the market structure and keeping your emotions out of it, check out a TTC membership. We teach you the setups, risk planning, how to build consistency, especially in unpredictable environments. But look, it's not for everyone, but if you're serious about leveling up, the link to our memberships is down below. And just in case you're aware, we have recently introduced a lower cost membership. It's kind of like a self-learning approach. So if you feel like you can learn by yourself from courses and from just reading our daily market updates, this is going to be the one for you. But if you prefer a more interactive environment where you get to ask questions from my team, be on our live sessions, interact with other community members, then you're going to want to go for first class membership. Okay, now let us talk about Bitcoin, because I saw a lot of things about Bitcoin on the internet this week when we had our Friday session over here, and all the other markets were dropping and people were mentioning online that Bitcoin held up really well. You know, we had big percentage drops in the rest of the market, but Bitcoin was only down like a few percent. So some traders are calling that strength, but I would not be so quick to make that judgment because, like I said, if we do get a true Black Monday style risk off event, Bitcoin's not immune. So the fact of the matter is Bitcoin is a 24/7 tradable asset. Sometimes it just lags in relation to the other markets, but sometimes it front runs it too. So let's go into this in detail. I'm going to zoom out on Bitcoin, and of course we're going to have a look at the daily time frame first to just get an overall idea of what's going on. I won't spend too much time on the macro for Bitcoin because I have covered it in detail in prior videos, and basically my thesis is that as long as we're holding above this prior high here before we broke out of it at about 73, really actually that's not even true. It's anywhere in that whole range there, this kind of range right here. So between say 69.5 to 76.5, anything, if the price were to revisit that range, I would consider it to be a retest of the prior resistance. So we had the breakout and now we're just simply coming back for a retest. And if that were to happen and we were to hold that area, that's where I would expect that we are going up for the final phase of the cycle. Now, before I keep going on that, actually, I just want to clear something up. In prior video, I said that in this cycle, I will be selling some of my Bitcoin, and people think I already did. Don't know why, because the video was pretty specific that I will be selling in the final phase. So I haven't sold any Bitcoin yet. I will be sharing it with my community when I make that decision. I'm waiting to see if we start to shift out and show me that the final phase is coming. That final phase should last a few months. So I would be slowly taking profits over those few months. That's the plan that I was explaining in the video. But you've always got to have a plan for what if that doesn't happen. You know, like what if this is actually the beginning of a bear market? So where I will cut it instead, if I don't see that we're going to start heading up for our final phase, would be if we come into this area and we actually do break back down below this prior resistance and we can't reclaim it. So they're my two plans. Anything in between that, I'm not doing anything. So now there's no need to assume. Now, does that mean I think we're definitely going down into this zone? At this point in time, I can't see why we wouldn't, to be honest with you. I don't really see any strong bounces. I see the 50 EMA holding up as a pretty dynamic resistance level right now, really has been for quite some time. So until the price can get back above and retest that, I don't have a reason to not believe that we won't come down into this area. I also know there's a lot of liquidity down there and it kind of makes sense. However, when I go to the 4-hour time frame, because I'm able to see my 3-level counts there, I always have to be open to the possibility of us not coming all the way down here and that this ends up at some point in time creating a higher low, which would essentially end up looking like a W formation. And that, if something like that were to happen, that would tell me we're not going any lower. This is as low as we're going to get because the market structure is about to change. So I'm still looking for one of those two things to happen, and I'm just remaining extremely patient until I see which one it is. I can get some help from the heat maps. Currently we've got high level orders at 82.6. That's just holding the weekend range, so I'm not really too worried about that, but I want to see if there's any high level orders below below price. And I can see that there is currently these ones here, which are sitting at 72,500. Now that was already drawn on my chart. You can see that right here. So if we were to come into those buy orders and they happen to stay there, then again, it would be a retest of the zone that kind of looking for anyway. So if that were to happen, we were to come into that area, it's another like 12% drop from where the price is right now. And I do at this point think that one strong possibility for the open this week is that potentially Asia and UK, or Asia or UK, I don't know which one, but potentially they run a trend to the upside and then US takes it back. And that's what gives us that final move to the downside. So like I said, it's going to be critical, absolutely critical to watch what happens in the US Open this week. Now, having a look at our weekend price action, you know, as we expect on weekends, it doesn't really do all that much. We know that traders get trapped on weekends. And at this point, we're in the typical weekend range. So there's really not too much to say about that. We can have a look at high block to have a look at where the liquidity is. You can see there's a ton of liquidity down here in the 75K region, 75.5, you know, so if the market maker wanted to send price down, there's definitely the liquidity there that would allow them to do it. And above price, the highest level is really all the way back up at 100. It really does kind of make sense that we'll go down further before up. But like I said, because of that 4-hour chart, we really need to be keeping an eye out on a potential hint that the market structure is going to change. Having a look at the delta currently for the weekend price action, we're at about 8 billion delta to the shorts. That means people are very bearish. 8 billion is not a lot. You know, we kind of expect trend changes at 20. So if they wanted to continue to send price down, it's just going to encourage more short traders, which will bring in that higher amount of liquidity. It would bring us closer to that 20 billion. And then we may see a pivot from there. Now, I realize you can't see the delta on the screen there, so you're just going to have to trust me that it is at 8 billion. So back to the chart. Like I said, price is currently in the weekend box. We expect it to be because it's still a weekend at the time of filming this. You can see down here, weekend volume is terrible. We expect that. Again, it's just a weekend. It's normal. Our open interest over the weekend has been dropping. So that's people closing positions. So that means that the market maker is going to have to induce traders to take a position. So you're looking for which way the price snaps out of this box in a few hours time. And two things could potentially happen. Well, actually a lot of things can happen, but two main things that could happen is you'll see a stop hunt one way. So if there's a stop hunt out of the box to the downside, we'll probably reverse and go up from there, because that would mean that it is stopping out the long traders and inducing short traders. And the same thing goes the other way, that if you see a stop hunt out of the top side of the box, it's inducing long traders, stopping out short traders, then it will actually reverse from there. So the other thing that can happen is that we don't get a move like that, and you might just change the structure within the box. If that happens, the safest way is to look for it to break out of the box and look for proof of that new trend. Could look something like this if we're going to go to the upside. If we're going to go to the downside, it will end up breaking down and looking something like this. Either way, if you're going to miss that trade, which sometimes it is a good idea to miss it, the main trade you're going to be looking for this week is over the session changeovers. So Asia into UK or UK into US. And I think that the UK into US is going to be the most important one. Let's go through some news events. This week, we've got free trading days on Monday and Tuesdays. We don't have any significant news events, unless of course Trump tweets literally anything. On a Wednesday, we have FOMC meeting minutes. If there's a surprise in those minutes, the market may react. We also have CPI and unemployment claims on Thursday. Friday, we've got GDP and PPI and consumer sentiment and inflation expectations. So take care out there. I still think we're on really tricky times, and I still think that the only way to extract money from the market right now is with short-term trading. You know, like I said, volatility is a trader's paradise, but for the purpose of investing, dollar cost averaging, it may not yet be the time, unless of course we see that hint of a trend reversal that we're looking on the 4-hour time frame. But pending that, it's really just a trader's market still.